So hello traders, what's up guys? How you guys doing? In this video, I would be showing you a live demonstration on how to trade futures on BitUnix exchange. It's a full tutorial and this would guide you perfectly well if you are new to trading and how you can take entries, stop loss, take profits, and everything you need to know. Now, the first thing you want to do is come over to futures section on your BitUnix app. If you don't have an account, sign up. The link is in the description of this video. You're going to get 50% cash back upon deposits when you use my link. Okay, and there will be other rewards that follows. Now, here on the BitUnix app, you can see we are on the futures tab and you can see how the interface looks like, similar to other exchanges. On the top here, we have what we call cross. We have our leverage, right? And if you click on this icon, this candlestick icon, it will display the chart for you. Let's do that together. Let's see. Can you see? To display the chart to you. So going back, right here where we have cross, right? If you tap on this, it will show you the margin mode, cross and isolated, cross, isolated. Now, let's read it together. All available assets, this is for cross mode now. I need to highlight this so that you see it yourself. All available assets in futures account are used as margin, okay? And positions will be liquidated when losses exceed the account balance. The account has a high ability to bear losses, making it easy to operate and calculate positions. Now, what this means for cross, what this means is that if you enter multiple positions, I drop signals in my group, the link is in the description of this video. If I drop multiple signals and you take all the signals, if you have $72 like I have right here, $72 like I have right here, okay, these $72 will be used as margin to cover the losses of all your positions. Let's say you are in a trade of BTC long, Ethereum short, BNB long, and so on and so forth. You have 5 trades running. It is this $72 that will be used as margin to service all these trades. Now, if your margin is not so big, it is not advisable to use cross with high leverage. You can just use your small leverage and then use your cross. Okay, now let's go back again. Isolated margin mode now. I'm doing this so that you have a clear understanding of it. Now it says short position and long position risk are calculated independently. Now the word cross meaning that all positions are crossed together. Isolated meaning that every position you enter is standing on its own. So if you enter a trade with $5, it is that $5 you are risking to market. Now let's read further. It said the user will only lose the position margin when the user liquidates the position. So your entire futures account will not be liquidated. Okay, it is only the position that will be liquidated. The position is the trade, meaning it is only the trade that will be liquidated. When the user actively closes the position, the losses and profits generated by the short position and the long position respectively will be immediately settled into the corresponding position margin. So I believe by this explanation, you already know which one you should be using. Now, limit and market. Okay, limit order is when you are placing an order, giving the exchange an order that you want to either start, you want to place a trade below the market price or above the market price. Now, for futures trading, you can make money by buying or selling. Unlike spot you only buy. You can't sell the market and make profit, right? You can't predict the market to fall and make profit from it. But on futures, you can predict that the market wants to fall and you make profit from it, and you enter a trade, a sell position, and make profit from it. Now, very simple, right? Amazing. Now, let's say we want to enter a trade on market, and this is Doge USDT. So I'll just use maybe 3%. What's the current market price right now on these assets? This is 0.23018, right? Good. So I want to enter this trade a buy position. So I will just put my stop loss maybe at 0.22, and I'll put my take profit higher. Your take profit when you are buying will be higher than the market price. So I'll put this at 0.25. After doing that, I will click on advanced and look at the profit I'm going to make. I will lose $3 if the price goes against me, and I will gain $7 if the price goes my way. So let's click on confirm, open long. You will see the trade now will be running. Can you see? It's already running. So let me close this guy now. So for limit, right? If you want to buy for limit, just change this to limit. Limit means you are expecting price to come lower, so you want to set an order. You want to give the exchange an order that if price comes to this position, tag me into the trade. So let's assume that you want to say price should get to 0.2000, right? 4 zeros. Now my stop loss and take profit, I will also put it. My stop loss now will now be lower than this limit price. Remember, our stop loss was lower than the current market price before, but now my stop loss will be lower than this limit price. So my stop loss could be 0.19, depending on my analysis. Then my take profit will be higher than the what this limit price I've put. So I'll say 0.25 again. I'll just click advance to see it. I'm risking $15 to get $75. Okay, I'll click on it and then I'll just click open long. Now remember, when we entered market, everything was showing here on position. You saw the trade happen, right? But now, since it's on limit, the trade has not started because price has not initiated us into the trade by what hitting our limit price. So but you can see it here. This is the open order. It will show here as open order. It won't show as position. It will show as open order, meaning I've just initiated an order that has not been filled. Let me click on this icon now so that I show you. Click on this icon. You can see it. The take profit, everything is right here. Are you seeing it? Good, 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 good. So I'm going to cancel this now. Right? Good. Now let's do the same thing for a sell position. Let's do it for a sell position. All right, now this same Doge, we are now anticipating that price wants to fall. What do we do? Very clear and simple. This is what we are going to do. We're anticipating that price wants to fall, right? Good. We'll now come here. Now our take profit is going to be lower because we are bidding that price wants to fall. So let's say our take profit is 0.19 now, and my stop loss, meaning that if price should go against me, meaning if price should go up, get me out of the trade, I will bear my loss. I'll put it 0.24. I'll just click on advance and you see I'm risking $16 to get $55, right? If I click on confirm now, you will see it. It will show there. But I don't want to go in. I don't want to risk my money on this. So now, let's do the same thing for limit. So on limit order now, I'm now anticipating that if price goes up, please sell for me. Start selling. I'm anticipating that price will start going up before it comes down. All right, I'm anticipating that price will go up before it comes down. So my limit price now would be a higher price when I want to sell. Let's say this is the market price 0.2863. I would say, okay, if price gets to 0.27, tag me into the trade. Now my stop loss will now be higher than 0.27, so I'll put my stop loss at 0.29, and I can put my take profit at say 0.21. You see, I'm risking 25 to get 76. In my next video, I'm going to talk more about risk to reward, why you should risk low to get high. Okay, that's how you become profitable in what you are doing. So now let's tag into this trade with limit order. Order has been placed. You can see it here. Just tap on it, you see it live and direct. Now, that's for how to trade futures on BitUnix exchange. Amazing video. I know definitely you must have enjoyed it. So click on the subscribe button and just keep following MJ Crypto right here on YouTube. And I'll be posting more videos most currently. Cheers, one love. Peace out to you all.